Didn't trade this week. Was busy with the fam. Took time off. No worries. No worries. No worries. Market ain't going nowhere. Um. Okay, guys. So got a little collab webinar we're doing with Riz this week. I'm just gonna start off. Just gonna go over some charts and stuff, and then yeah, me and Riz will have a good chat with everybody after the call, or sorry, after like all the charts and stuff. I know some of this content might not be familiar to some of you. So all I ask is that you bear with me. I know some things might be confusing, all this kind of stuff. But so if you are new, get a notepad out, whatever you want to do, take some notes maybe. But yeah, I can't go over everything in detail because we'll be here for hours. But bear with me as much as possible. All right. So I'll do my best over here. Um, took me 5 months. Give it time. It's worth it, y'all. Yes, sir. Yes, sir. Okay. Let me get my screen record or shared up. Can you guys see my screen okay? Let me know. Let me get the chat up too. One sec. Cool. One second, guys. I gotta close everything else because my computer does not want to cooperate when I'm recording and everything. Time to go grab the kids. No worries, Nino. It's gonna be recorded and uploaded later for you guys anyway. So just give it a watch. Take it easy though. Okay, cool. Okay, cool. Well, first I want to go over Euro. Euro was probably the pair to be looking at for the week. We did I sent a forecast out earlier in the midweek about we're looking for longs. Had an intraday target which we're going to cover, and then we also had a swing target which ended up hitting beautifully as well. So we'll cover both. Just gonna hit the rewind tool. So it was on Wednesday. Was the end day to take the entry, and then again there was multiple targets to take advantage of. Again, both on an intraday perspective, and then also on like an intro week, holding it for a couple of days. Okay, so start off here on the higher time frames ish on the hourly. Okay, so what can we see? The market was selling off to the downside. Okay, something to note on the way down. Look how the market sold off here. Okay, from this point, we've went long, took out this high. Okay, why is this important? I know the newer guys here aren't too familiar with this, but when we take out highs like this, you can anticipate and expect that these areas down at the lows are going to be traps. Okay, especially if you have a bearish bias. Okay, because retail sees this as being a BOS to the upside, market structure shift, however you want to call it. So they're going to be looking to take buys from these areas. Okay, maybe it's down this red box, maybe it's in this POI, whatever it is, they're going to be looking for buys. Okay, so we understand that. So we now want to see, guys, if let me just mute everybody. Actually, mute all. Okay. So once we take out that high, we trade above it, grab that liquidity, and now we start selling off again to the downside. Okay. If you look to the left-hand side, anyone that's looking to buy in these regions here, okay, you can see how we have a bunch of lower time frame imbalances. This whole area would be like a higher time frame POI for retail. They would be taking buy entries here. Okay. And then again, they can see that they get a confirmation. So they want to take buy entries again here. They get trapped once here and then also down here. Why is that important? That now tells me that liquidity has been taken in the market. Okay, so we mark this low out. Cool. And now we can start to look to target price back to the upside. Okay, we've had liquidity taken from the left. So why not look for bullish price action back to the upside? Okay, sometimes we don't have sufficient liquidity. So what the market will do is build liquidity for us on the way up. All right, so we'll get to that. All this price action here, it was consolidating and it was sluggish for a reason. Okay, this sell-off that we had at the beginning of the week occurred again, taking that liquidity from the left-hand side. Then we print this low in the market, okay, and we go bullish. Why is this important? Okay, this is important now because this is going to be an area retail is going to be looking to buy from. Okay, because from this low, look how we printed a new high. approach back to the low. If I zoom in, you'll see a little better. So again, BOS happened here. So why is that important? Retail is going to be looking to buy this area. So on purpose, the market respected it to build that liquidity below here. Because again, if buyers are looking to take entries here, stop losses go where? Boom, below the low. Perfect. So we want to see this occur. Okay. Then the market goes long. Perfect. Grabs this internal high. So an internal liquidity point. Then sells back off to the low. This low we had marked out before. And look at this. Respects it and moves away. This is all done for a reason. Okay. This builds liquidity in the market for us and essentially just induces early buyers. Okay. You want to see this buildup of liquidity happen. Don't get psyched out when you see that this low has just been respected as like a double bottom, a triple bottom, whatever it is. It moves away. Now that tells us we have liquidity below this low. Now, looking on the other side of the market, remember, if we want to go long, we have to have a reason to go long, right? We have to be targeting some sort of liquidity in the opposite direction. So look what the market does for us. Simple stuff here. We get a sell-off again from this high down to this low. We get a sell-off to the downside, taking out lows from here, taking out lows from the left. So retail is going to look as to that as what? What does retail see this as when we take out this low? BOS to the downside. Perfect. They're going to be interested in selling these areas back at the highs. Okay. And again, look how the market respects it multiple times, once, twice, 3 times, back to the high, 4 times, 5 times. This is all done on purpose. This is what you want to see occur. Okay. Because after we move away from this high and we sell off, what does that now tell me? We've got liquidity above this high. Okay. Perfect. Don't forget, now that we've respected this high, again, we have a reason to go to the upside now, which is perfect. This is what we want to see. But don't forget, we've left buyers in the market here. So these guys need to get taken out in order for us to take a buy entry. Let's just say, for example purposes, this respected these lows to the left-hand side and just went all the way to the upside. There's no entry for us. Okay. And this is how you choose between low probability trades and high probability trades. If you understand where the liquidity is, then you simply just wait for it to get taken. Example being this low here. You wait for these lows to go, and that'll be able to filter out the low probability. That'll be able to give you the high probability trades opposed to taking the low probability ones. Being if you just assumed that this was going to be the low, just because we swept this low and we're going to go long from here, you're early. You're early because there's still liquidity left in the market here. You want to make sure this is taken out before looking for any sort of long entries. All right. So, coincidence again. Take a look at this. We take out this low. Okay. Retail sees this as what? What's this? Again, BOS. So we can mark that out just to show you guys. Retail is going to think this is a BOS in the market. Where are they going to want to sell again? Boom. Back at the highs. Okay. So sellers are entering these kind of positions. We understand that they're taking positions here. So again, this is just another confluence for us to target the highs. Okay. So sellers get induced here. Look at this. BOS to the upside. So anybody looking to buy this thing, they get trapped. Boom. And that's why there's this little reaction here from low all the way back up to high here before we sell off. That's because there was buyers looking to take entries in these areas. They get trapped. And that's what fueled the move back up to the upside. But it was just short-lived. Why was it short-lived? Because again, don't forget liquidity to the left-hand side. Okay. This is the importance of understanding where the liquidity is lying in the market. All right. So look how we purposely respect that low once more, move higher. All right. Leaving this liquidity, inducing more buyers. Finally, we get a sell-off. This is in Wednesday in the heart of New York. This is right after, I believe we had, you know what? Let's just check for example purposes. Wednesday. My time is going to be different from you guys. Yeah. So we had news 8:15 and news 10 a.m. Yeah, there was news. So news 8:15 would have been right here. Perfect. So the market waited for the news and then continuously struggled to move to the downside, leaving more liquidity for us to target. Perfect. This is just on a scalp perspective because don't forget about the higher time frames, right? Don't forget about these highs up here. Don't get too caught up on the lower time frames and think, okay, we're going to take the long down here and we're just going to target here. Done. No, because you're going to miss out on the actual move that we're looking for. We're looking to occur. Right. Okay. So now that we've built that whole story of why price should travel back to the upside, How are we going to take this entry? So we were discussing this price action down here. Remember how we swept this liquidity from the left-hand side? Any buyers that were buying from this low, they've gotten trapped. So why is this important? What does this now become? Why does this low, why should it get respected? This low down here. It's because it's a liquidity block. Exactly. So essentially what that means is there's no liquidity below this low. So it could respect, it should, we can anticipate that it's going to respect it, print some sort of low. It could come all the way down to, let's just draw this line out. It could come all the way down to here and make equals if it wants. But as long as it stays above that liquidity, that low, then it's valid. Okay. So essentially you could take a buy anywhere within, let's get a blue box here. Anywhere within this blue box is a valid buy. Okay. However you want to take it, you can wait for a refinement from the left-hand side. So you can wait for a candle to get tapped. You can take 50% of this whole region, this whole area, and wait for that to get tapped. It didn't work in this example. There's a bunch of multiple different ways. It's completely up to how you want to enter the market. Okay. Now the way I would have, if I put on my buy tool like this, again, my stop loss always goes below that liquidity block. Okay. Sorry, just like this. Goes below the liquidity block like this. And I'm going to be targeting, we have these highs here and other targets being at the highs. We have relative equals left. Oops. Up here. Okay. Some more highs left up here. So there's a bunch of different highs to target. This being the intraday, this being a more swing / intra-week, however you want to look at it. So if I was looking at this trade here and I wanted to take a buy entry, I need to ask myself, does this RR make sense? To the first target, it's a 1 to 3. Okay. And to be honest with you, if I'm looking to enter the market, I always want to be looking for a 1 to 3 minimum. I most likely would have waited for price to come a little bit deeper. So this is when you just have to be a little bit patient. But most of the time, if the RR makes sense, as soon as the liquidity is taken, meaning these lows here, I'm entering the market. Okay. I don't need to have the most pitch perfect bottom of the bottom of the low or the very top of the high. As long as I follow my system, the RR makes sense, then I'm okay getting in at as soon as the liquidity is taken. All right. Obviously, in this example here, the top of the candle would have worked on the M15. So you could have taken it like this and got a little more of a refined entry. But you have to understand something. The risk of waiting for these areas to get tapped on the left-hand side is it doesn't always work. Okay. Sometimes it just wants to sweep the liquidity and go. It doesn't need to tap the left-hand side. So again, I usually wait for liquidity to get ran and then I'll take my my entry. Okay. So multiple targets. This being a very good partial point, this being another good one, and then another good one at the highs. Okay. And again, just zoom out and look at this whole picture here. Look at this. BOS to the downside. Retail wants to sell this. Okay. We've moved away once here. We've moved away again here. Okay. And then we get another BOS to the downside and sellers want to sell again. Boom. Look how much of a reasoning we have to move to the upside now. All right. Let me clear out this markings. And just like that, we get a very, very nice entry. First target's met. And then if I just hit get out of the replay, you can see that all targets have been met. Okay. Obviously, last one being met today in NFP. Was it NFP? Yeah, it was right off NFP. But nonetheless, this was probably the trade of the week, in my opinion. Not only did it play out nicely, but the whole story pre-entry was what we want to look for all the time. Okay, any questions? Clean, clean, clean. Yes, sir. US 30 trade of the week. Yeah, we'll take a look at this as well. But yeah, guys, these are the kind of things you want to see. Something you need to be aware of, and this is I think a lot of people's downfall as well, is you have to understand that this price action here from Monday, end of New York, to Wednesday. So you have basically the rest of Monday, all of Tuesday, and half of Wednesday was building liquidity for this move. So that's the power of, you have to understand patience is very, very important. If you weren't able to stay patient, there was times maybe you could have taken an L here somehow. You could have taken an L here somehow, understanding that you have to wait for these lows to go. All of this price action here was just to build liquidity for us. Okay. build that reasoning for us to go higher, and also induce those early buyers before price can move from A all the way up to the upside. Okay. But yeah, clean stuff. I'm gonna delete all the drawings and we can take a look at the higher time frames. Looking at this thing on the higher time frames, we're on the weekly, so understand that this could take a long time to play out, but we've swept a lot of lows, a lot of liquidity from the left-hand side. Okay, so overall on the higher time frames, I'm anticipating these highs to go, and that's a long way to go. And understand that this is the weekly time frame, so it could take a long time to play out. But overall, I probably want to see price back up to the upside. Hope everyone's been well. Just dropping by at work. Looking forward to see the recording. No worries, brother. Good to see you as well. But yeah, clean stuff out of Euro. Now, what can I see Euro doing? I mean, now we've taken out highs here. Why is this important? Again, same concept still applies. BOS to the downside here. Where's retail interested in selling? They're interested in selling here. Okay, look how the market purposely respected these areas, moved away, and then finally we have now taken out that high, trapping anybody that was looking to sell. So look how, if people are selling like this, they have stop losses above. Guess what? They get liquidated today. And that's why the market has moved the opposite direction now. Okay, grabbing liquidity here. So we'll see what the market does next. Now that since we've had this sharp sell-off after NFP, I need to see where liquidity is built on an intraday perspective now. I can't really tell you where it's going to be heading to next. All I know is that we've grabbed liquidity from the left-hand side and fueled us to liquidity at the lows. Okay, grabbing liquidity here. And that's all I can see right now. But yeah, that's it for Euro. Again, super clean. Ends up being a nice move from down here, again, all the way to up here. Perfect stuff. Cool. Gold. Let's take a look at this thing. Okay. Gold's in an interesting spot. Everyone in my group kind of knows that we've been talking about gold for a bit. We'll start off on the higher time frame. So let's go to the daily. Okay, cool. I'm going to talk about what I see right now. Could be wrong because, again, there's liquidity building on both sides of the market. We're going to dive into like the hourly and the 4 hour, and I'm going to explain what I see. But yeah, we'll start off on the higher time frames here. We get a big sell-off in, I believe, November, right? Yeah, beginning of November. So we basically sold off for half the month, okay? Clearing liquidity at this low, and that's what fuels us for a move back up, okay? The move back up to an internal point, again, once we grab that liquidity from this high, it fuels us for a move back down, okay? And if I go on to the 4 hour, you can see after grabbing liquidity from the high over here, it fuels us for a move back to the downside, grabbing internal over here. Perfect. And going on to the hourly, perfect. We can see after grabbing the liquidity from this low, we have now kind of been struggling. And this is what I see. We have sellers looking to take this thing lower at areas like this. Okay. So what this tells me is we're starting to build lots of liquidity at this high. Okay. But something to stay aware of is we've now left liquidity at the lows. So this is when sitting in your hands isn't a bad thing to do. Okay. Because a lot of people, they'll try and trade market conditions like this. And if you're not experienced and you're new, sorry, I put that. Thanks for putting this on. No worries. If you're new to liquidity concepts or just in your learning stages at all, when you're trying to trade price action like this is when things get very toxic. Okay, because let's just say you're looking for buys, you take a buy entry, and then you start second guessing. Okay, and the reason you're second guessing subconsciously, you're like, I want this thing to go long, but then you're like, hey, we got lows down here, we got highs up here. Okay, so we're leaving liquidity on both sides of the market, so it's hard to kind of dictate and choose what side of the market's going to get taken first. So I kind of like to wait sometimes. I don't mind to wait. What I can see right now is I can see that once we took out this high, buyers are induced. What does that mean? BOS to the upside, which means they want to be buying down at this low. Okay, and look what the market does. Perfect. We want to see this all the time. The market respects this low all on purpose, moves away. So this tells me now we've got liquidity down at this low. In the market, again, waiting for news on Thursday. Yes, it was on Thursday. We get a big sell-off to the downside. taking the buyers out, okay? Leaving liquidity here. Not only this liquidity, leaving this liquidity here, and then also this high up here. So I am looking overall for a move up to this side, or to the upside, but don't rule out these lows down here. And the reason why I'm staying aware on both sides again is because we have liquidity on both sides. But look how much easier it's going to be. Let's just say we go long, for example, sweep the highs. Look how easy it is for us to choose a bias, a direction now. Okay. We've left liquidity at the lows and we've taken liquidity at the highs. This is now probably going to be a good area to start looking for sells. Okay. That's just my perspective right now. I like to sit on my hands if I see liquidity on both sides of the market. It's just kind of, again, filtering out the low probability from the high probability. It is, it's not wrong to trade in this market conditions like this. It's just, you have to be, again, a little more experienced, and you have to be open to taking a loss here and there. Okay. Got to go. Thank you for your time. I'll watch the recording later. No worries. This is similar PA that EU created Monday to Wednesday before the move was shown. Patience review. Exactly. And a lot of the times, as we know, we had news every single day this week: Monday, Tuesday, Wednesday, Thursday, and Friday. So the market will tend to build liquidity on both sides of the market prior to these news events, especially on a day like NFP, where look how we built liquidity essentially all like this for the whole week, just for us to take it out and then maybe move the other direction. So this is just how the market fuels. I mean, if it doesn't have liquidity, it'll simply just consolidate in range and respect lows and respect highs until it's ready to move one way. Okay, that's the power of patience again. Understanding that there was liquidity below these lows. Now looking for longs down here could have been valid for sure. Okay, again, pinpointing where gold's going to be heading to next. If I'm had to choose, I'm leaning to longs, but I'm also not going to be surprised. Let's say we move up here, take out this high and sell back off to the downside. I would not be shocked as well. Okay, these are things you just have to be aware of for sure. Okay, any questions on gold or any little pointers you guys want to talk about? I believe some people took shorts on Thursday, New York, which is something we can speak about actually quite quick. Okay, this high was created in pre-London, okay? Sweeping this high from the left-hand side. Why is this important? It's not just some random high. Since we've taken out this low, okay, retail is going to see that as, again, a BOS in the market. They're going to want to sell at the high. So, coincidence, we spike the high and trap sellers, creating a liquidity block for us. But we don't just take entries off liquidity blocks. We need to see some sort of buildup. And right away, I can see a buildup occurring on the M15. I'll open it up just so it makes a little more sense to you guys. Oops. Building liquidity at the highs over here. Okay, we sell off to the downside, leaving liquidity at the highs here. And coincidence, we have a liquidity block right above. Entry-wise, you could have waited for, honestly, let's use the M15 because it probably looks the nicest. You could have waited for this high to get taken and taken an entry like this. Okay, so anywhere above this high could have been valid. The reason being is because our target is quite far. So if you could take your entry like this, stop loss above the liquidity block, so you could have a 40, 50 pip stop because look how far your target's going to be. Okay, at least, well, you know what? Let's just be realistic. You can say maybe a partial here, but the thing is it's a 1 to 2.3. So again, that goes back to what I was talking about EU. You could wait and be a little bit more greedy and wait for price to come to a higher point so that RR makes sense to your first target point. So you could target here, maybe here, and then finally here. Okay. After these lows are taken, again, this is where liquidity was built at. Definitely need to be at a majority of your position, 80%, 90% of your position for sure. Okay. Because this is now, again, don't get me wrong, there is a form of liquidity down here, but this is definitely the area that you could see maybe bullish price action like we got. Okay. Okay, so yeah, again, you could have taken it anywhere above this high, or if you wanted to wait for some sort of confirmation-based entry, check this out. So price here taps into that M15 imbalance, which we were talking about. Look how we take out this low. Why is that important? Because retail is now going to be looking to sell this high. So we'll mark that out. Get rid of the blue box. They're going to be looking to sell up here. So if we understand that retail is going to be want to sell from this red box anywhere, it could be like an imbalance on the 1 minute time frame. You can take an entry as soon as that high is taken, because after this high is taken, that now tells me sellers have been trapped. Okay, because this is not an area where we want to be selling from. We want to sell it from above it. And coincidence, we have a liquidity block right above. And the extreme entry would have worked as well from the left-hand side. Look at this. If you wanted to refine it, that would have worked. Perfect. Or if you just want to be a little more safe, you take it as soon as this high is taken here. And again, we have that reasoning to move lower now. Okay, we're not just taking a sell entry, hoping it's just going to go down, targeting random lows. We built a whole bunch of liquidity at the lows. Okay, so again, target here. Sure, 1 to 3.7. You can take a small partial. Another target being down here, which is 200 pips. Perfect. And then last target being down here, which is just over 300 pips. Final target being almost a 1 to 11. Again, most people here aren't going to be, there was one guy here actually that did, but most people here aren't going to be holding full volume to 1 to 11. But it's just, it depends what you're comfortable with. Okay. Ends up being pretty clean. Stabbing out this liquidity, tapping into that liquidity block and selling off to the downside. Okay. And then coincidence, after buyers from here have been induced and trapped, look at this big move that we get back to the upside, taking out high here and then taking out this internal as well. Okay. Again, I can't really pinpoint where gold's gonna be head to next. The thing is, we have liquidity on both sides of the market, so it could go anywhere right now. I'm just gonna wait. All right. But yeah, this is it on gold. Let's see what the weekly candle ends up closing up like. So this week, we ended up just trading within previous week's low and high. Okay, so be interesting to see what next week does. Maybe it spikes weekly low and continues up. Okay, or it just can continue off to the downside as well. It'll be interesting to see. All right. Yep, gold and euro all done, I believe. Oh, I do want to cover some good stuff on AUD USD today. All right. We'll start off on the hourly time frame. Zoom out because there's some stuff on the left-hand side we need to look at. Cool. Okay, so looking at this at a very large perspective, we've stabbed the high. Okay. Retail is going to be looking to buy the low. Okay. Red. They're looking to buy the low. Okay. If we understand that we now know that there's going to be, okay, well, let me shrink it. There's going to be liquidity below here. So that's something to keep an eye on for sure. Okay. Oops, sounds weird. This high, or sorry, this low down here we can mark out. Now, zooming into more current price action. This was on Wednesday. We get a sell-off to the downside. Okay. Why is this important again? There's an intention behind every move. All right, guys. So we sell off, clear the low here. Retail sees this as BOS. This is now going to be a region retail is looking to sell from. Okay. And we understand that. So look how the market purposely gives reactions, moves away. Okay. Clear some sort of internal here, which fuels a move back up to the upside to target what? Liquidity. This is where the sellers are looking to take sells from. Okay. Anywhere below this high, they were looking to take sells from. They get trapped now. Perfect. This is what we want to see. Now, we want to start looking for sells. Okay. But don't forget, we need that reasoning. We need that reasoning for us to go lower. So look what price does. We induce higher once. Okay. Then we come back down to the low. Respect structure, again, on purpose to induce buyers into the market, to induce that liquidity at the low. Okay. And then we induce higher again. What does that mean? Buyers want to buy this thing again here. And coincidence, they get trapped. Okay. Don't forget, we're still trading within this whole area as well. So there's still a ton of liquidity below this low. So we'll mark that out. Okay. Then we go long and then we induce higher once more. Perfect. No problem. Now look at this low. Look at the lows, the liquidity we left at the lows now. You could look for sells up here. I believe this was a shit time though, because I was looking at this. You could start looking for sells up here. The problem is I'm not even going to go through it because the time of day just wouldn't have made sense. It's not realistic. This is right at just after the market opens on Thursday. So like early Asia, we get this rapid sell-off down, okay? And it hunts for this. After this low is taken out, personally, I can't be looking for sells right now. Why? We don't have a reasoning to come down here yet. We understand that this is going to be a trap. 1 second. We understand that this is going to be a trap because we took this high. So retail sees this as a BOS. But again, we haven't built liquidity at the low yet. So look what the market does here today. This is so, so clean. All through late Thursday, so all through Asia, all through London, we build liquidity here. Look at this. Massive buildup of liquidity, all done on purpose for NFP. So anybody that's looking to trade in London before NFP, you're just going to kill yourself because this is all a buildup of liquidity. So the market will reveal its hand. It'll make more sense once NFP has dropped. Okay, so same thing. We sell off, clear liquidity at the lows, inducing sellers. Okay, retail sees this as a BOS. We'll mark it on BOS. They want to sell where? Here, back at the high. Perfect. We understand that. Look how we build liquidity down to the lows. We respect this low to the left-hand side. So again, now we have that reasoning to push to this low. We have liquidity down here now. Anybody that was taking buys down here, look, they're going to enter like this. Stop loss below here. They're now in buy positions, and they've loaded up liquidity below this low for us. Perfect. We want to target that. Also, we have now just trap sellers. Retail sees this as a BOS to the upside. So where are they going to buy now? Coincidence. They're going to buy the low. So even more liquidity down here. And again, don't forget the low over here to the left. So this is textbook setup. We build liquidity at the lows. We run highs the other way. We have built liquidity here. So if I open up this price action here, you know what? Let me just clear this and go on the 1 minute. So it just looks a little more. Anybody that was looking to sell here, they enter positions. Boom. Again, where are they going to put their stop loss? They're going to cover the high. I put my line there. Oops. And coincidence, look at that. We spike it to the T. And there's a reasoning behind that. If I look right above this as well, what a coincidence. We have a liquidity block. So what does that mean for us? This now means, according to our system, we can take this entry. Okay. Let me clean this up a bit. So we'll mark out the whole area. This is probably like a 5-minute area. I'll just mark it all out. Go back to the 5 minutes. So again, multiple different ways to take this entry. Like I've always told you guys, I like to take it as soon as the liquidity is taken. So I'll just press sell as soon as that high is taken, the one I have the horizontal ray on. Stop loss always above the liquidity block. Okay. And the reason why I like this entry so much too, the big move up, is because if you think about it, where's your first partial point going to be? Let me just take the sell two off. Where's our first partial point going to be? David, thank you. Perfect. This is going to be our first partial point. Okay. This big move from NFP, well, NFP actually was announced right here. But yeah, essentially this whole move from NFP gave us a good first partial point because it was 36 pips up, false move up, which means it's going to be another 36 pips down to the first partial point. Again, sell entry taken just like this. As soon as the liquidity is taken, with our stop above the liquidity block. First partial point is going to be here down at the low, which is 1 to 10. Definitely, since you're going to be floating quite a bit at this low, be closing 70, 80% at this low, and then holding to the low on the left-hand side. Okay. Super, super clean. Again, think of the intention behind every move here. From this low to this high, we induce buyers, okay, by breaking structure to the upside. So these regions, all these red boxes are going to be traps. This is a trap. This is a trap. Think about how many buyers are looking to take this thing back long, okay? And then again, once they see, okay, we've taken out this low, maybe we go back down to the downside, it builds more liquidity, induces more sellers, okay? You wait for these early sellers to get taken out. Then we capitalize on the move back down. I think Tuesday gives one sell in London 4 a.m. Tuesday. Wait, am I tripping here? Wednesday. Oh, sorry, it's back up here. Good eye. I can see it already. Yes, sir. Liquidity block formed. Build up right below. Look at that. Look at that. So clean. Liquidity block formed. This is the first step you want to see. Perfect, because this is now going to support our entry. Then you get a build up over here. Look how price purposely respects regions to the left-hand side over here, sells off. Again, over here, sells off, and then comes all the way up to trap sellers. Okay, respects liquidity block, and then sells back to the downside. Since this is a BOS to the upside for retail, what's this going to be? Trap. So we'll make it red. And then we get a reaction from retail POI. They see this being what? Trap. Or sorry, BOS to the upside. So they're going to be looking to take this thing long right here. Everyone's just going to get trapped over and over and over. Hi, will you... Oscar, what do you mean, brother? Will I raise the class? Let me know what you mean, but I'm sorry. I don't follow. But yeah, ends up being super clean. Euro buys midweek, Aussie end week. There was a couple entries on gold. Some good stuff overall. Let's see. Interesting play here. I'll mark this out for you guys. I don't know how many people trade UJ or look at UJ, but I've seen we've now taken out this high. Okay, so my eyes go down to this low, but we could build liquidity on the way down. Look what price did here. Took out this low over here, inducing sellers. So this is going to be a region retail wants to sell from. Look how we respected it once, twice, 3 times, and big sell-off. I see this sell-off as possibly being false. Okay, grabbing liquidity at the lows. I do want to see price above here. If it doesn't, I can't take a sell. No problem. Bro, is the liquidity block the same thing as an order block? No, it's not. Liquidity block is a higher low that does not have liquidity. Again, it depends if it's a low or high. For example, being a... Oops. We grab liquidity here. This now becomes a liquidity block. This should get respected because since we swept liquidity here, there's no liquidity below this low. We have no reason to push back down to this low. So it should get respected in some way, shape, or form. Again, we're not just looking to take a buy entry right away off it. You want to see some sort of buildup occur. Always want to see a buildup and then a run. Boom. Take the buy. Move. Okay. But this is something I have my eyes on UJ. So it could be a nice move back down. The reason being is because if we come all the way back up here, however we do, if we come all the way back up here, we're looking for a sell move to the downside. That could be about 200 pips. So I got my eyes on UJ right now. Could be a nice move back down to the downside, but who knows? It could also sell down and just leave this for a future target. It happens as well. That's the power of understanding low probability again from high probability. All right, guys. Any questions? Any trades you guys want me to cover before I give the floor over to Papa Riz? UC. Oh, that we end up having a nice long, I believe, from that. I marked that up earlier in the week. Yeah, look at that. So we could run over this one quickly. This is a nice one. We take out this low. The intention behind this, yes, is to run liquidity, but this also induces sellers in the market. Okay, so we can get that red box. I can mark out this high, not as big as this. Look how much sellers were looking to take this thing lower. Okay, for how long? Let me, if I get the ruler out. So we traded at that high for about a day and 15 hours. So almost 2 days of price action. We are trading at this high, inducing sellers. Okay. Then we get this massive, can't even speak English. This massive sell off to the downside, clearing internal here, and respecting a liquidity block. Why did we respect it? There was no liquidity below this low. No liquidity there. So look how we respect it and move away. Okay. As for confirmation-based entries, I don't know if we had one. Let me take a look in the lower time frames. I think the timing wasn't too good as well. Yeah, it doesn't look like we had a confirmation-based entry. Only entry could have been taken down here. Okay. Reason being was because I would have probably looked to see price below this low here to take a buy back up. But did not occur. And again, targets, if you take this entry down here, this is a tough one actually, because look at this. Stop loss below liquidity block. This would have been a great place to partial for sure. Because look also after how we run it, we get a sell off to the downside. So should have been partially at this high nonetheless. But the problem is it would have been really close. And let's be realistic here. If I was to take this entry, I probably would have taken it at the beginning of the blue box. So let me adjust this tool. So I would have taken partials here, and then it would have came and tagged me BE to the absolute T. And it is what it is. Sometimes that happens. Very rarely I see this occur. But the reason being I would have gone to BE as well is because after I take this high out, I'm partialing, and usually after I partial, I will roll my stop loss, but I won't roll it until I manage my position. Okay. I got stopped out, but the re-entry was good. Down here. Yeah. Super clean. And then again, of course, it comes all the way back down to the almost the extreme, and possibly could have tagged you out BE. Maybe you could have stayed in, and then again runs all the way up to the seller liquidity. Perfect stuff. Okay, anybody looking to take this thing lower from here, they leave their stop losses either above this high or maybe something to the left-hand side. They all get mitigated, or sorry, they all get liquidated on the way back up. So we use their liquidity as our target because this is now a reasoning for us to push higher to the upside. Okay. Perfect. Cool. Okay. If you guys don't have any more chart questions or any trades I can go through. Oh, yeah, Ryan. Sorry. Let me cover that. Apologies. I did forget about that. US 30. Did you take it short? Was it yesterday? Was it yesterday on Thursday in New York? Yeah. Let's take a look. Well, actually, let's cover the. Okay. I'm not gonna lie to you guys. I don't love the higher time frames, but let's mark out what we do see. Okay, since we're trading so high right now, it's just who knows where it can go, right? It's in no man's land essentially. But nonetheless, we've built liquidity at this low, moved away, taking out this. Did we take this out? Yes. If you stretch it, we took it out. So why is that important? BOS to the upside. These regions here should all be traps. Okay, you have an area here, you have an area down here. Don't get me wrong, it could give reactions. Again, if it gives reactions, just building liquidity. But overall, again, like we talk about all the time, it should be traps. Okay. So I believe you probably had this low marked out here as a good partial point, probably. Yeah. Yeah, probably actually. Yeah, that's a good place. We respected this low once, moved away. Another time, moved away. So we understand that buyer liquidity is going to be sitting below here. Okay. So we look to target that. Perfect. Yeah, I can already probably see where you took it. We have created this liquidity block here. Perfect. Now we want to see a buildup of liquidity. I can see in this price action right here. I'll go on. I'm not even going to go on the, actually, you know what? Let's go on the 5-minute. I thought I was on the 5 already. We take out this low. Why is this important? This induces sellers. Okay. They want to enter positions in this region, but we want to see price respect it. We want to see price build liquidity here. Okay. So we respect it once, twice, 3 times, and finally we get that sell off. So sellers are taking positions in these areas. Where's their liquidity going to be? Boom. Coincidence, we have a liquidity block right above. Anywhere above this high here that we have marked on where the red box is a valid sell. So you can take sell like this, stop loss above the liquidity block, and now we're targeting liquidity on the opposite direction. First partial point would be a great area right here at this wick. And then let's see where it ends up going. Sells off more. Look how we marked off this red area here, anticipating that this could give reactions, and it does. Look how it builds liquidity here. False reaction here at NFP to induce what? Buyers. Because they see this as BOS. So this is going to be a trap. Perfect. Grab something from the left-hand side. This price action is really ugly, so I'm not even going to try and pinpoint what it grabs, but grab something from the left and then fuels this move back down to the downside. Okay. But due to the spread will be L. If you miscalculate your spread, which I hope you guys are not doing because that's an important thing, then yeah, you could probably take an L here. But overall, look, it respects the high. And we spoke about it We spoke about it on EU. Okay. Sometimes price will create a liquidity block. Okay. We create the liquidity block, we move away, and then we have some sort of a liquidity buildup. And then we run all the way back down and then go. Okay. It can make equals, almost perfect equals. And that's what happens here, just on the opposite direction, right? This is a sell, this is a buy. As long as it stays above this low, it's valid. As long as it stays below this high, it's valid. No problem. If you're miscalculating your spread, that's a human error, right? Not a market error. So definitely want to be calculating your spreads properly for sure. Don't forget, there's no spread on buy stop losses, but there is spread on sell stop losses. So make sure your sell stop losses are correct, but your buy stop losses you can actually keep quite tight because there's no spread on the buy stop. I got a dash, guys. See you all soon. Take it easy. Have a good weekend, brother. Clean stuff though, Ryan. Very, very, very clean sell. Entry wise and direction wise is perfect. That's what we like to see. Cool. I'm gonna leave this to good old Riz now to hop on, do his thing. But this is gonna be it for me on the chart side of things. Riz, you all good?
Yeah, all good, man. We
Nice
can
one,
wrap
brother.
it.
I'm gonna. You don't need to
I
share
mean,
screen or anything, do you?
no, no, should be all
Perfect.
good. I'll keep it short and sweet. Da, da, da. Yeah, feel free if you have any sort of questions, throw them in the chat there, and I'll answer them as I go along. But really, obviously, it's Friday. I know it's late. Well, depending where you are in the world, it's probably about afternoon, and if you are in the States, um, but yeah, as I was saying. What's important to recognize is we're coming towards the end of the year, of course. We're coming towards, well, we are in December. I was gonna say coming towards the end of the year, but we really are. But what normally happens at that time is everyone always thinks about, setting their goals. Especially December 30th, December 31st, January 1st. They're setting their goals for then. But the reality is, the best thing you can ever do is build your momentum now. By doing all of those exercises right now and going to work and starting to take action on it right now. I know in people's heads, it's a lot of the time can be, counterproductive. It's like, oh, it's family time. It's time of year to just slow down and rest and sort of relax and then go really big and go as savage as possible going into January. But that's just the wrong mindset because what you're telling yourself, and the truth is, right, is you're saying that those goals and those things that you're trying to work towards aren't important. They don't matter. But that's the complete opposite, right? Well, I would like to think so, right? Really, you think the opposite, that those things do matter to you. Like being a profitable trader matters to you. Making progress and being successful matters to you. Creating freedom matters to you. But if you can delay those things and say, hey, now you know what, Monday or January 1st is when I'll start really putting the effort in or really ramp things up. I've got other things to focus on right now. Then it doesn't really matter to you. That's the truth. And don't expect to see results. Don't expect to see change. Don't expect to be successful. That's the reality of it. It's black and white when it comes to being successful, being profitable. Like there are just two options, right? In trading, what are you? You're either losing or you're profitable, right? Yeah, you could say break even, but really, in reality, if you're wanting to be a trader, that counts as losing, right? Because you're not profitable. So there's always two options, right? You're either successful or you're failing at being successful. Does that make sense? Now, you need to have that unwavering mindset, that unwavering belief, that persistence, that work ethic that is necessary to be successful. Most people don't have it, unfortunately. Most people do work hard, but they don't work smart enough. And they do work hard, but they're not really putting in as much effort as they could. They work hard in terms of really, if you want to really be savage with it, they work hard at making out they work hard. They work hard at being able to say that they work hard. But in reality, the amount of work that's going on is very slim to none. Now, the truth is, if you want to be successful, especially in trading, you need to be willing to put in the work. What does that work look like? And more recently, obviously, before I would say similar stuff, but I would say, strategy and technicals and making sure you're turning up. But it can get more specific nowadays because thankfully, over the last, I would say, few months in particular, but last couple of years, I've spoken to some of the very best traders in the world. Especially the last few months, we're talking verified traders, we're talking market wizards, we're talking traders who are managing tens of millions to hundreds of millions. And I'm going to speak to a hell of a lot more. And when I speak to them, it's about having edge. It's about having a profitable winning system, having a profitable edge. What does that mean? That means doing the work in order to collect the data, whether that's back testing, live testing, or both together. It's reviewing that data and taking trading seriously and a professional manner, even if you're not a professional trader, meaning that you work in a firm or traditional prop firm or in investment banking, even if you're just a retail trader at home on your laptop on your phone, wherever it may be, you still need to treat it in a professional manner. Treat it in the manner that it deserves, which is necessary for you to be profitable. And that is, like I said, having a profitable edge. Now, what does a profitable edge look like? Is when you have a positive or profitable expectancy, which basically means that you find a particular pattern within the markets. Doesn't necessarily mean technical pattern alone. It could be fundamentally driven. It could be technicals, of course, yes. It could be in terms of your trading rules, which means like your risk to reward, your risk per trade, your partialing strategy if you do that, your TP strategy if you do that. It could be time of day. It's a particular pattern. So let's take gold as an example. You might recognize by watching gold that you see. And you go, okay, at New York session, gold does X, Y, and Z. It likes to sweep some form of liquidity, have some sort of move, and some form of confirmation that presents a particular trade that gives a X risk to reward. And if I risk X on that trade and follow the rules to that trade, overall, it has a particular strike rate. So it's all data driven, it's all numbers driven, right? And that's why having an edge is the only thing that's going to allow you to be profitable in the markets, right? Now, don't get me wrong, you can have an edge and have a terrible mindset and still not make money. But the reality of having an edge helps your mindset, it improves your mindset. It allows you to not use trading psychology as a bullshit excuse that you use when you don't have an edge and you take some losses or you blow up your trading account and say, it's my psychology that's the problem. It's bullshit. You don't actually have the data for your edge. Some people have an edge and they trade the edge, but they still unfortunately find themselves kind of going back and forth a little bit in terms of their P&L again because they haven't collected the actual data to observe it, meaning they haven't gotten the data from their edge to say, you know what, taking a losing streak, average losing streak looks like 4 or 5 trades, right, in a row. Instead, because they haven't collected that data, even though they have a profitable edge, because they haven't collected the data to have a bit more confidence in that edge, to trust that edge, to believe in that edge, when they go through that 4 or 5 losing streak, they lose their head. And therefore, again, blaming psychology, they'll say, oh, my psychology isn't on point, or something else. They always blame outside factors. When in reality, it's again not taking or collecting the data for that edge, right? Only by having that trading edge can you build the confidence. Only by having that trading edge can you really, look at what an average trade looks like. What are you doing? Hello, I'm on a call.
I can see Uncle Mark thing.
You can see Uncle Marco's name. I know. Yeah. I'm on a call though. There's other people on there as well. Okay, go on, go.
Hello, Ariana.
Hey,
I'm gonna come down after. Okay, go on.
why, 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 why are there other people on there too?
Because they tuned in because me and Uncle Marco organized a webinar. Okay, go on. Go, go, go. Go, 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 go. Get out of here. Huh? Please what?
Please can I stay with you?
Why? Okay, just sit there then. Okay. Because it's recording as well. We don't know where it's gonna go. Okay. Stay there. Anyway, as I was saying, edge, right? Because even if you have a profitable edge and you're not collecting data, you can still blame the psychology and think even it's not even blaming. You might even assume that it's psychology that's the problem when in reality it's not. So that's why every profitable trader has the data, reviews their trades, collects the information on their trades, is optimized. And thanks to doing that process as well, you can optimize your edge, make sure it's performing at its very, very best. Because it's like getting a car and then never looking after it, never servicing it, never, doing what they do, the service checks, like checking the oil or the I don't know about cars that well, but like checking the brakes, right? If you never do that, eventually, even if it's a brand new car, after maybe 2 years, your brakes are going to be completely, done over, and it essentially leads to more decay, if you will. And that's probably what will happen to your edge if you're not optimizing, you're not reviewing it, you're not actually observing what the data is telling you. More than likely, your edge will diminish, and that's probably what ends up happening if you're not tracking. If you're tracking, however, it means that the likelihood of that edge diminishing is very slim because you're optimizing it. You're keeping up to date with what the market's doing and how the edge is performing. And you're looking at the nuances, the slight differences that the markets are presenting, whether it's the change in trend, whether it's the volatility, maybe a certain asset class starts to underperform versus another asset class, and therefore you take your edge, you recognize it does work on this asset class. So asset class meaning it could be indices to Forex, Forex to futures, futures to crypto, for example. Um, and you're able to make those tweaks a lot easier because you have the data and the edge versus having nothing and thinking, okay, I have a system and I'm going to trade this system, but I have no data, I have no numbers actually to rely on, to look at, to observe, to use, to make decisions, to use, to also not make decisions, right? So as I always said, I've said it like all week to be fair to a lot of people. Like if you're trading on prop firms or small live account or live account in general, and you have no edge, right? Or you have not done, you got no data, you've not back tested, you've not journaled, you've not live tested, you shouldn't be trading. You should not be trading live capital. You could demo trade for sure, but you should not be trading live capital at all. Don't expect to be successful unless you have that data, unless you have that data that you can rely on and use in the markets, right? And use to reflect on and use when you're taking these losses, when you're taking having those hard weeks, even when those moments when you aren't clear on something, you're not seeing the markets clearly. Having that edge is so important. I've not met a profitable trader yet who doesn't have that edge. So, really, your goal going into the new year, how to build that momentum, is to make sure, first of all, if you don't have that edge, start getting to work on that. Don't rush anything either. There's no point rushing a process, because if they rushed, if you think about car manufacturers, why is it that, Toyota, Ford, Ford, who else? Toyota, Ford, I don't know. I'm trying to think of like a US company as well, but Toyota, Ford, Mazda, I don't know, Mitsubishi, I don't know. They're not technically Tesla as well, but like, why are these cars not like thought of or like sought after? Why are they cheaper? Why are they not the cars that when you get successful, you would think about, oh, I'm gonna get that car because they're mass made, they're rushed, they're quickly made, they're lower quality. There's so many of them versus the cars that take 2 years to build, 3 years to build, the intricacies, the details, right? They're the ones that when that have the price tag. They're the ones that whenever you hear of someone having a wish list or a vision board or goals of when they have money or what they want to get, it's those type of cars. It's the cars that have effort involved in it. And even the old classics, right? Even if it's not like these new Lamborghinis, even if it's like an old Ford Mustang, it's the same principle. Is that car's had effort. It's got this quality to it versus the rushing nature, the mass appeal. What do the masses do? What are the majority of traders doing? They're losing. Why are they losing? Because they're rushing. Why are they rushing? Because they want and have this desire for freedom and money, which is great. Which is obviously, I'm not going to sit here and say, hey, you shouldn't be trading for money. Everyone gets into trading for money. Everyone who trades, of course, for money. But that is not the only reason they trade. They trade because they enjoy it. They trade because they enjoy the challenge that trading presents them, right? The battle of coming into the markets and essentially outperforming the market, outperforming other traders, being the best trader that they could possibly be. Luis Borsalino talked about that in the podcast yesterday. He talked about how his whole aim coming to the market was to beat you. Obviously, his trading was different in his day in terms of it was pit trading, so it was very much beating the other traders in the pit. But regardless, though, he said like it's beating the market, beating you, beating other traders, other funds. Like he wanted to be the very best possible. That competitive nature is what develops successful traders. So if you're only trading for money, it's not going to really work out too well. It's very rare, and I haven't met a trader yet who's gone, I only trade for money, right? Successful ones, I'm talking. I've met losing traders who say that, but yet they're still losing, so it doesn't make sense to me. Does that understand to you? Like, why is it the message, sorry, from the profitable traders is very much in line with each other? Even though they're different styles, of course, like strategy wise, they all trade different strategies. You know, there's traders out there who trade the opposite sentiment to other traders like Jason Shapiro. There's traders out there who swing trade. There's traders out there who scalp. There's traders out there who day trade. There's traders who only use fundamentals and don't like technicals at all. Right? There's traders who use low risk to rewards and negative risk to rewards, and there's traders who use super high risk to rewards. There's traders who trade with no stop losses, right? I wouldn't advise it, but there are traders who do that. Anything can work when you have edge. There's one trader in particular who I'm looking forward to interviewing. He doesn't even use technicals or fundamentals in the usual sense. He uses social media to build an edge, right? He uses TikTok comments and Twitter to build an edge. Not even around technicals, around what people are saying about a particular thing that could lead to a company performing well or not, and investing that way. So in terms of strategy, it can be widely different. There's no problem with that. What matters though is you have an edge, right? You have to have an edge. If you don't have an edge, don't expect to be profitable. If you don't take your time and focus on quality over quantity and making sure you're doing the right steps every single day consistently, don't expect to be profitable, right? It's harsh, but it's true. And until the moment you change and actually make drastic change, don't expect to be profitable. And that change shouldn't be Monday. That change shouldn't be January 1st. That change should be now, right? Doesn't matter if it's 11 p.m. where you are, 2 p.m. where you are, 10 a.m. where you are, or like 7 p.m. where you are right now. You get off this call and you reflect. Reflect on your journey so far. Reflect on this last 11 months of this year. Reflect on, okay, how much effort did I put in? What could I have done better? What have I achieved? What did I struggle with? Focus on setting goals, and very specific goals. Some of you have goals of, okay, I want to make, millions from trading. Cool. How though? Be specific. You want to make it from personal account? You want to make it from prop firms? You want to make it from investors? You want to make it from, working in an institutional hedge fund? Because each of those goals requires a whole different journey, requires a whole different set of skill sets, right? Maybe not personal and prop, but even then, it is true. Because prop requires a certain level of skill set, certain level of trading, because of the parameters that are in place, right? No worries, KSD. We're going to wrap up shortly, but no worries. It's great to have you on here. But yeah, each one of those requires different goals. If you want to be in a fund, or an investor capital, you need to have verified track record. For a fund, you might even need to have a certain diploma, certain skill sets that you might have to go out there and get. Even with investors as well, you might have to get certain licenses, right? For prop firms, you're going to need to have trade within those rules. For personal though, you're still going to need to be able to raise capital, make that capital, be able to handle yourself building that capital. Different skill sets. Yeah, most traders will sit there and say, "Hey, I want to trade 1 million one day. I want to trade 2 million one day." Cool. How though? Where's the specifics of that journey? Because once you have the specifics, then you can work on it properly. Then you have a clear target and goal, a very clear one, and then you know exactly the steps you need to take. And if let's say it's not clear of exactly the steps you need to take, reverse engineer it. Right? If you want to be 1 million funded, what does that look like backwards? Maybe that doesn't look like 1 million straight away. Maybe, and more than likely it shouldn't. Maybe it looks like 500K. Before 500K, what does it look like? Maybe 200K. What does 200K look like? Before that, 100K. Maybe 50K. It might not be. But again, reverse engineer it if it's not clear to you. Right? Do these steps now after this call. Reflect. Be very specific in your goals. Then work out what gaps are in your trading. Do you have gaps in your fundamentals that you want to fill? Do you have gaps in your technicals? What specifically do those gaps look like? Do you struggle with liquidity? What specifically about liquidity do you struggle with? Right? Where can you find that knowledge? Where can you get that knowledge? Find that person, find that video, find that webinar, find that PDF. Learn it. Spend your time on doing it. No, don't rush. Right? The amount of people I've seen join courses and they jump in and they're like, I've watched the whole course in a day or two, but then they're asking questions that the course would answer, right? Or they're trying to trade whilst they're learning about a new concept that doesn't even make sense. And that just automatically, whenever I used to see that, and you can ask some people here probably who probably seen me do it, I would literally just be like, "You're not gonna see progress. You're not gonna win. What you might as well do right now is just cancel your membership and leave." Right? Some people I even said like they would try and argue with me like, "No, it's okay. I'll stay." I would say, "No, I don't want you here. Your mindset's just wrong. Get out." Right? You're not gonna. It's not gonna work out. It's not gonna work for you. You probably just build resentment towards me or this or a group or whatever. Just leave. It's not worth it. Right? You haven't got the right mindset. I did that last year, then took a year break. There you go. Right? It's important sometimes to reflect, take time out, understand where you're at. I'm doing better now. Good. Good. That's how it should be. Huh? Yeah. Yeah. Nearly done, Harry. But yeah, reflect. Understand where those gaps are. Seek out the knowledge. Right? Seek out who's going to help you to fill that. Make sure you're active in asking questions and seeking that knowledge because no one else knows what you're struggling with. No one other than yourself is going to know where the gaps in your knowledge is. And it's your job to make sure that you are proactive. Don't worry about what other people think. Don't worry about asking a dumb question because they don't exist. What does exist though is a lazy question. And what I mean by that though, and this is twofold, what I mean by that is, let's say, you struggle with Asia liquidity, right? Asia session liquidity, where random example. And Marco has made a video on it yesterday. But you come into a Zoom and you go, hey man, tell me this about Asia liquidity, and you haven't watched that video, that's lazy, right? That's lazy because he's already done the work for you and you're not even bothering to watch it. And now you want to not waste his time, but essentially say, hey, give me the answer directly because I don't want to watch that video, right? Versus, though, on the other side of it, though, say you watched it, but you don't quite understand it. Perfect. Say, hey, Mark, I watched that video. I didn't quite understand it. Could you explain it again? That's absolutely fine. Because Mark is going to turn around and be like, that's great. You watched it. I want you to have clarity. Let me try and explain it in a different way or use an example or whatever it may be. Right. And that's how it should be. Because that's not a lazy question anymore. That's a great question because it means that you put the work in. Right. You've tried to put the work in. You still don't understand it. Great. Now move on. Find the way to understand it. Yeah. After that, though, like I said, then it's about getting to work. Build your edge, journal, build your edge, right? Collect the data so you understand it. You want to be in a position when you're going to a prop firm, when you're going to a live account, where you have data. Not that you know exactly what's going to happen, because that's impossible. That's not that's not the reality that we trade within. But you have a very strong probabilistic chance because of the data you have that indicates to you that you should be performing at X. It indicates to you that you should pass that prop firm because your statistics. Well, I was about to say data and statistics at the same time. Your data tells you that you should pass. Your data tells you, on average, when you should pass. Right? That's how it should be. Now imagine your psychological barriers that you currently have if you're not haven't got an edge, how much they dissipate, how much they lower in their weight on your shoulders and in your mind when you have edge, when you have data backed edge, data backed strategy, data backed decisions that you do within the markets. Okay. So really take action on that. Really reflect, really think about, okay, right now, what can I do so that I have the most momentum going into the new year? And the one challenge I would set you, and I've set it before, and most people don't stick to it, if anyone, is work every single day towards your chosen goal or where you want to make progress. Every single day. Oh, we're getting the behind the scenes of Marco's class days. Do you what? Every single day.
Funny, funny, funny.
Every single day for 6 months. Every day for 6 months. Now, you're probably thinking, how is that's not possible? Of course, it's possible. It's a choice. Doesn't matter if you're flying here, if it's Christmas, if it's someone's birthday. They're all excuses. They're all distractions. They're all things that are always going to happen, right? But the reality is, if you're truly dedicated towards something, it doesn't matter what tries to get in your way. And what I'm not unrealistic. I'm not sitting there saying, hey, you need to put 10 hours a day in. No, because the reality is, of you focusing for 10 hours a day and putting quality work in is almost slim to impossible. I'm talking about putting dedicated work in, whether it's an hour, 15 minutes, 2 hours, right? Whatever can be dedicated work, do it every day. Some days might be great. You feel great. You feel momentum. You feel motivated. You do 4 hours of focused work. Fantastic. Some days might be 10 minutes, right? And that's absolutely fine. What matters is the momentum. What matters is that you carry it forward. So, like it's Friday right now. Most traders, unfortunately, come the weekend, they don't do anything, right? And therefore, that momentum begins to dip and disappear. And then they have to try and build it all back up again on Monday. No. Saturday, you should be reflecting on the previous week, optimizing how it went, recognizing what you did good, what you didn't. That might only take half an hour, might only take an hour. That's enough, right? Sunday, you should be preparing for the week ahead. Again, might only take 15 minutes, half an hour. But these things, right? These things are what will make the difference. These things is the difference between the winning traders and the losing traders. And it's as simple as that. Right? So I'll challenge you. After this, you reflect, you set your targets and goals specifically, and don't set 20 goals. I used to be that person. 15, 20 goals end of the year. No. Set one or two. That's it. One or two. And put all your energy into one or two goals only. One should be trading related if you're here and you focus on trading. One should be trading related, and the other one is up to you. You don't have to have the second one, but second one could be health, it could be relationship, it could be peace of mind or your mindset, whatever it may be. Right? It might be a holiday, whatever. But only two goals maximum. Focus all energy. And what ends up happening is you end up hitting those two goals way faster because you're focused only on those two things. Then you can move on to goal number 3. Then you can move on to goal number 4. Right? Only then though. But these are the tasks. These are the things that you need to do. So after this call, do that. Accountability wise, it's up to you. How do you document that journey? Fellow trader, a family member, social media, a private Telegram, private Discord, whatever it may be that helps you to document and measure your and track your progress and to be accountable, do it. No excuses. Community is an incredible thing. Having good people around you is an incredible thing. It's rare, don't get me wrong, but it's incredible if people are truly on it. Let's say there's 2 people in here right now who are truly dedicated to working every single day and trying to optimize and be the best version of themselves every day for the next 6 months minimum. They're guaranteed to make progress. They're guaranteed to really level up, especially when they're combined and holding that accountability every single day. Right? So it's up to you. No one has control of the journey that you're on other than yourself. No one can help you more than yourself. People can show you the way, people can teach you, people can do all of these things, but no one's going to make it happen for you. Only you can do that. Right? And that's what it takes. And there's going to be so much pressure, so much struggle, so much hardship along the way. Embrace that. Understand, and this is a really important point actually before we go, is understand the journey you've chosen. You've chosen essentially a journey of entrepreneurship, a journey of being different to the masses, the average life that you could live. And as part of that choice comes risk, comes hardship, comes failure, comes adversity. And that shouldn't put you off because you've chosen that journey. When you chose to be a trader, you chose a harder path. And therefore, when hard things come along and when things feel really, really stressful and hard, that's it. You accept that. You embrace it, if anything. Use it to push yourself and say, hey, the average person isn't in this position. I'll tell you that right now. And for me to get the freedom I want and for me to get to the levels I want to get to, this is what it takes. Right? Because I don't struggle I say I don't struggle. What I mean is I go through moments where I feel pressure, I feel stress, I feel fatigued, I feel hardship, right? On levels that most wouldn't even be able to handle, right? But because I'm able to handle them, it's a blessing. And because then in moments like earlier this week, I felt really not down, but like I was feeling pressure. I was feeling pressure and it was getting to me a little bit. And then I clocked on to no, this is the pressure I want. It's in these moments that you choose if you're going to win or not. It's in these moments where you show that you're going to succeed or not. If you give in to that pressure, you're not going to make it, right? If you allow that, if you overcome that pressure and understand that that pressure is what is making you and pushing you to be the person you need to be, then you'll make it, Then you'll push through. And it won't be easy. That doesn't mean it'll be easy. But you will push yourself through it because you know you can and you know you will and you know you want to, most of all. But that wraps us up for this Friday webinar, I think. But but it's been a pleasure as always. But get to work, get to work. Don't, let's say off the back of this webinar, you feel motivated and you're like, I want to do that work. Do it now, do it now, or let's say you're at work right now, straight after work, no excuses, right? Um, instead, what most people probably will do is feel a bit motivated, like I'm gonna do that, and then they don't do it, right? They might say tomorrow. Tomorrow's great. Tomorrow's a great day. It's 11 p.m. right now. It's or 1 a.m. right now, as an example, or wherever you are. Let's say if you were, it's 1 a.m. where I am. Ugh, do it tomorrow. No, you've already failed. That's it. As simple as that. You've already
This little
failed.
mindset, this mindset hack I use is as soon as I have that feeling of I don't want to do something, but there's benefit behind it. For example, I'll just use going to the gym. Let's say the time comes, the time that you plan to go to the gym is 12 o'clock. You need to go to the gym, and in your head you're like, oh, I really don't want to go. As soon as I feel that feeling of oh, I don't want to go or I don't want to do this, I go do it. That's
Yeah.
what fuels me. Like I don't want to do it for a reason because I know it's going to be hard, but there's going to be benefits to it, and that's why I go do it. And that's helped me so much recently with tomorrow doesn't exist. Yeah. It's a little hack I have. Like I don't want to go to the gym every single day. There's gonna be times where I'm a little bit tired, a little bit stressed, a little bit this, a little bit that. But as soon as I have that feeling of, oh, I don't want to go, that's exactly why I go. Because I know it's gonna benefit me.
That's it. So when I did that marathon, by the way, Marco hasn't run a marathon, but I have. Anyway,
Hey, relax. Hey.
when I ran that marathon, it was the same thing. It was like in my head, it was like, why are you doing this? Like, you know what I mean? Like, you can stop now, you
Yeah.
know? And it was just that simple. It's literally, I think a marathon is 80% in the end, is 80% mindset, you know? Of course, there's the training and everything, especially if you want to do it in a certain time. Of course, there's physical, but even then, it probably becomes even more mindset related if you're trying to do it at a very savage and competitive pace. Because like your everything, your body and your mind is telling you just to stop. Like, what are you doing? Like, you
Hmm.
gain nothing other than pain from this. But it's that mental fortitude, mental fortitude, and I think that's why running is actually, I wouldn't say beneficial to trading necessarily, but definitely it's something that it's so direct in terms of as soon as you run, your mind's like, "What? You stop!" Like your mind
Yeah.
instantly just stop.
Every
And I think
step,
that's
every
very
step of the
different.
way.
Yeah, like, I think that's very different to weights. Like, I think weights you can get a good feeling from, like, oh yeah, I enjoy doing weights. But when it comes to running, I think everyone's body automatically goes, just stop running. What are you doing? You're tired. You don't need to. It's cold, whatever. Like, just stop. As soon as you start, like your mind is just straight away like, what are you going? What is going on here?
100%. Like
Um,
tomorrow morning, it's snowing. It's gonna be minus 12 degrees. I'm going for a 5K run, 7 a.m. Do I want to do it? No, but as I know, is it going to benefit me for sure? So I got to go do it anyways. But yeah, it's funny that you said. I think running it can help directly with the mental side of training for sure. It builds so much mental strength. Like Riz said, like you get out there and you start running, and every single step, like I don't care what anybody says, every step of the way, you're like, oh, just stop. Your head's just like, just stop, just stop. Just what are you doing? What are you doing? So you're in a consistent battle with your mind for however long you're running 20 minutes, 30 minutes, 40 minutes for an hour but for the whole time, you're just this guy says, "Bro, fuck around." Trust me, I was the exact same way. But you end up the enjoyment you get out of it, the mental gratification you get out of it is just it's
the
next
thing is,
level.
if you say that, Steve, that means you have to do it. That tells you.
Exactly, exactly. You should have said I love running because then you didn't have to do it. Now that you said you
Yeah.
hate it, you have to go run.
Like David there, he said 3 a.m. here. That's great because that means the exercises we just set, you need to do them now at 3 a.m. That's
I
actually how it works. I swear to God, that's how it works.
run to McDonald's. He says,
Marco will kill you.
"No, we don't do that. No
Like
golden
McDonald's,
arches
yeah.
over here."
We don't like McDonald's, yeah. That's right.
They support disease.
Oh, yes, they do
I,
support
I
disease.
think Ariana needs to close us off. Does she have anything to say to us?
What do you want to say to the webinar?
Um,
You don't know. Feel
The
like your
suspense
uncle.
is killing me.
Marco. You laugh like this.
Ariana, tell me.
ICT is a fake trader.
ICT is a fake trader. I love it.
Someone's gonna clip that. Send it out.
Yeah, there we go. Now that's going on Twitter. Okay,
All
nice
right,
one,
then.
guys. Briz, always appreciate you hopping on, talking with everybody. That was awesome. For the guys from the Viper group and the people that couldn't attend, I will upload this separately on YouTube. I don't know actually. Let me try and figure something out. Because if I upload it on YouTube, there's some people out there that do some mean stuff with the content. But I'll figure a way out to try and get this to the Viper guys. But for my guys in the IE community, it'll be uploaded to WAP as per usual. But yeah, that's everything from us, guys. I hope you guys enjoyed the webinar. Awesome stuff from Riz giving us some gems. Like, you have to understand, this guy speaks with the top traders in the world. And he says all the time, but it's true. These people are the most profitable, the most successful when it comes to trading. So take what he says seriously. Like, he speaks with these guys that are killing it for years, killing it for decades. So he's got good things to tell us. But yeah, hope you guys enjoyed. Amazing webinar. Thank you. Thanks, guys. Appreciate you. Hope you guys